Good morning. This is Jim Anderson with First Citizens Wealth Management. As we've seen the vaccines roll out, the economies open up, and as we get closer and closer to herd immunity, we've seen local and state economies get stronger and stronger by the day. As a result, we've seen the overall economy and the equity markets strengthen. As we sit here today, we see all the various markets, the Dow, the S&P, and the NASDAQ, all sitting at or close to record high territories. We've seen many record highs this year and expect to see many more as the year goes on. We're entering the first quarter earnings season announcement. We are expecting first quarter earnings to be increased about 21% year over year. In addition to that, we expect second quarter earnings to be very strong as well. There's been obviously a lot of reasons for the strength in the economy, in addition to the vaccine rollout and approaching herd immunity. As we know, the federal government has unleashed record amounts of stimulus and thrown at the pandemic to get the economies opened up. We've also seen the Federal Reserve being very easy with the monetary supply, and we expect this to continue as well going forward. We don't expect the Federal Reserve to raise rates between now and probably into 2022 and possibly into 2023. They have announced that inflation, as long as it's below 2%, they will not raise rates. It's at about 1.6% and rising, and we'll talk about that here in a moment. And the unemployment rate is at about 6%, and they've announced that they won't do anything with unemployment until it hits about 3.5%. So we still have a long ways to go in that front before we are really too concerned about rates being raised. As we mentioned, year-over-year earnings have been strong, and we expect those to continue. But also going forward, we know that while the economy and the markets are strengthening, we know that this is not going to be without some headaches along the way. Obviously, right now, some things that we're concerned about are inflation. We've seen agricultural products, building supplies, oil, metals, materials, things like that. The prices of those going up significantly lately. We all know that there's a supply chain disruption, and we've seen that in the automobile manufacturing sector as well. So lots of issues like that to consider. And then also going forward, things that we think could be potential issues are going to be the U.S.-China trade policies, the growth of the U.S. debt, and then also the effect of higher taxes going forward. So we know there's a lot of issues out there that we need to keep a very close eye on, but at least in the very near term, we are expecting the market and the economy to continue to perform well, and we're expecting a good year this year. As always, if you have any questions or any concerns about your portfolio, please feel free to stop in and give us a call, and we'll be happy to sit down and visit with you. Thank you.